What do you think of top-down analysis?
Well, that's what macro is, really. It's top-down is the colloquial way of saying macro, right? Because you're ultimately thinking about bigger issues than individual situations of stock. Having said that, what you might be also discussing is the approach to investing in equities with top-down analysis. So the idea there is, instead of analyzing, say, the balance sheet and income statement and conference calls of the Gap and Walmart, you basically are just saying, look, I think e-tailing is going to put retailing out of business, and I'm going to short all Best Buy, Walmart, Target, etc. And I'm not even going to look. I'm not even going to look at those companies individually. I'm just focused on a thematic, so-called top-down hypothesis. And it's a very valid way to invest. I don't particularly like it myself, but it's perfectly reasonable.
Do you use the MACD, and do you use the regular parameters?
No, I don't look at any so-called technical analysis, stochastic measurements. I think they're not useful. I don't trade every day. I have a lot of companies and assets. I mean, it's mostly private companies, so it's hard to determine exactly what they're worth.
What brokerage do you use?
All of them.
What's your main one? Do you use Thinkorswim?
Goldman Sachs.
They have a brokerage?
Goldman Sachs is maybe the world's biggest brokerage firm. Yeah, might have heard of it. Martin Shkreli. Yeah.
What do you think of index funds like Vanguard versus stock picking?
Well, I just spent a lot of time explaining that I don't think stocks go up over the long run. Making a drug out of changing the genes in human cells has been a goal for a very, very long time. It's just not feasible, even with CRISPR, in my opinion. But, it's a very technical discussion.
But do you think it will be to the point where there's actually going to be designer bees and stuff?
Maybe. I don't know. We'll see. It's too early to tell. I don't think it's likely, just because of the way CRISPR works on a technical basis, but never say never. The easiest way to get a Bloomberg is to pay for it. Well, sometimes I say I'm a trader, sometimes I'm an investor. Like, those words don't mean anything. Anytime you trade cash for some security, you're trading and investing. I mean, investing is just maybe like a arrogant way to say trading. Are currencies usually more risky than equity investments? Well, like, currencies don't move a lot by definition. Equities can go worthless, so can currencies, I suppose. I don't know that it's easy to answer. Do you consider macro factors when deciding an equity entry point? No, I don't. Warren Buffett sort of says the same thing. Although, to practice what one preaches, I think one often likes to make long-term investments when the markets have been sort of in dire straits. Favorite economist? That's like asking what my favorite dental drill procedure is. I don't know, root canal or extraction. I don't like economists. Maybe Adam Smith. I don't know. I didn't say that real estate and land ownership is bad. I just don't understand it, and I don't know that I ever will. I understand that there's finite property and places that people want to live, and they're willing to ascribe value to those places. I'm not comfortable with analyzing the supply and demand of them. Hello?
Wondering if you've ever read The Intelligent Investor?
Come on. It's like...
Yes. Right?
Yeah.
So, a lot of people say that it's, like the holy Bible of investing or whatever, but, I was wondering if you had any, criticisms of it.
Sure, yeah. I mean, it's a book. It's written by a guy who never made any money investing. I mean, there's 100 criticisms of it. I think the point of books isn't that they dictate to you what to do. The point of these books is to open your mind to ideas, and you're supposed to think through yourself, kind of the pros and cons. Obviously, the very mechanical way of value investing doesn't work in practice. One of the things a lot of people try to do, for instance, is if a company has, say, $2 a share of cash on its balance sheet and it's trading for $1, a lot of people will try to buy that stock and then shut down the company and get the cash back. But the reality is that the amount of time and cost it takes to do that, you'll burn that whole dollar, sometimes even more. And I don't know, I think that it's just something that should expand your mind, but it's not like a prescription for success or anything. Do you think Peter Lynch or Bill Ackman is a legend in investment? No, neither are legends in anything.
I have a question on VRX stock. Any thoughts?
I don't have any thoughts on it. I don't, Like
Valiant Pharmaceuticals. Do you know anything about it?
Yeah, I know a little bit about Valiant. Yeah, I mean, I just think it's, it's a public company. It's not that exciting either way. I think, it's probably fair.
If you had to choose one stock to invest in, what would it be?
Probably a private company.
Private company?
Yeah. Public companies are very well scrutinized by investors, and it's very hard to find good public companies to trade. I mean, I have a few public companies in my portfolios. I just, I'm not here to give stock tips to anyone.
Thank you for your time, sir.
Sure. Can I elaborate on the comments? Yeah, I mean, Lynch, it was one of the first books I read, his Beating the Market or whatever it was called. The Magellan Fund. It was just a growth fund. I mean, it did well in the time when the markets, it was hard not to do well. You don't reward someone for doing well when it's easy to do well. Ackman has lost a lot of money since the inception of Pershing Square. So he's more of a salesperson than an investor. Yeah, one up on Wall Street. Best place to put undeployed capital, cash. Municipal bonds are just bonds issued by municipalities like states, and they fund the expansion of some public works. And there's kind of this interesting arbitrage in municipal bonds that the federal government will never let a municipality go bankrupt. And so municipal bonds are like implicit guarantees by the federal government. So you'll often have these pretty good deals in municipal bonds, but it's never say never, right? In really bad economic environment, a state can go bankrupt while the government does not. Alex asks, why invest in cash if interest rates are so low? Again, there's no free lunch. Sometimes I wonder if people are even listening to me. If interest rates are really high, it means that inflation's high. It's not like you're getting a good deal. I mean, you can, what good is it to get that 5% when your money's dropping by 5%? It doesn't make a difference.
Hey, Martin, I wanted to know if you had any thoughts on Novavax, particularly their RSV vaccine.
Novavax?
Yep.
Yeah, I'm not, I'm not Jim Cramer. I'm not taking individual questions on individual stocks. I mean, if I look, the way you're supposed to look at a stock is you're supposed to spend 100 hours carefully looking at it, researching it, getting every nook and cranny. You can't just make a split second judgment on a stock. And I haven't spent 100 hours on it. I'm focused on I'm spending my time creating new companies instead of looking at individual stocks at the moment. What do I do if I'm just an average person who wants their savings to have a good chance of beating inflation? Honestly, I think you're shit out of luck. I think you should spend your time making as much money as possible in your career. It doesn't mean you have to be a workaholic, but you should focus on getting skills that will help you earn more money. I don't think you should, like I've said a million times, I think investing, this idea that you're going to beat all the great professional investors who are barely making any money themselves, that you are going to single-handedly somehow invest in some stocks that are going to make you a fortune. It's as likely as me going into the ring against Brock Lesnar and knocking him out. I mean, why would you want to fight Brock Lesnar? Why? For money. Yeah, you bet Brock Lesnar your life savings that you're going to beat him up. That's what it's like, you investing in the stock market. It's stupid. Unless you're willing to dedicate all of your time to this. Don't do it. There's people who are, and they get paid a lot, and they're going to take your money. That's basically how it works. I do think it's a zero-sum game. I mean, again, look at the figures I started with in this lesson. Net of inflation and net of taxes, stocks don't really have a positive expected return. Focus on yourself. Make an expected return out of your income, out of your own self. I think that's sort of what you should be doing. So BP pays us, let me see here on BP. BP pays a 7% yield. Well, you're taking risk. Of course, you can look up high yield bonds all you want. You're taking an enormous amount of risk. Paying a 7% yield because there's a chance they're not going to keep paying it. And you're going to lose equity value. That's the problem. It doesn't mean there's not return out there. There's return for risk unit.
What's your advice on treasury bonds? I know there's a lot of stuff with that, but I've never fully understood it.
I mean, they're the least risky bonds or least risky instrument you can have. I mean, they're probably the best. I mean, they're probably the best investment you can make in terms of safety and return. I mean, you're going to get something. But again, there's no free lunch. I mean, you're making an implicit bet. When you buy treasury bonds, you're making a bet that inflation will drop. You're making a bet that the United States will remain the most powerful country, and you can lose an enormous amount relative to that. But in terms of loss of principal, there's virtually no risk. But in terms of an investment, I'm not sure it's a good investment. All the stocks I looked at in tech, I like Stamps.com. I liked RealPage. So, there's some stocks that I bought. RealPage has done pretty well. I like that one a lot. It's a real estate. Why don't I like Malcolm Gladwell? Malcolm Gladwell is like the scientist's equivalent of Neil deGrasse Tyson. It's just a pop writer that, isn't that insightful. I'm not saying he doesn't research his books. He does. It's just the insights and conclusions he draws are extremely boring. If you're fascinated by Malcolm Gladwell, I feel bad for you. By equivalent, I mean Neil deGrasse Tyson isn't an important scientist. He just sort of frames things in a way that people tend to like, which I'm not saying is not a skill, but the idea that you can gain some wisdom from Neil deGrasse Tyson as opposed to actually just reading Newton and Galileo and Darwin yourself, you're better off doing that than getting it filtered by Neil deGrasse Tyson. Internship, I don't think interning at a young age is like, there's this fallacy that you need to do everything first, you need to do everything before everyone else. It doesn't make any sense. You should always be wanting to educate yourself, but just because I did something when I was 17 or 18 instead of 22 or 25, don't let that fool you into thinking that that's how you can generate superlative results. It might actually even hurt you. How could it hurt you? I mean, you can be sort of chasing the wrong ideals by being thrust into a situation when you're too young to understand it. You don't have the perspective. If you're not willing to become a professional investor, I don't think you should invest. It's just the same thing as like, I want to be a casual MMA fighter. Well, you're either going to do it or you're not. And especially, you might want to be a casual basketball player, guitar player, but if someone said, I want you to play that guitar and try to beat the Radiohead guitarist for money, I'd say, no thanks, I don't want to play this game. And that's sort of the nature of investing. I mean, do I like playing guitar? Of course I like playing guitar. Do I like playing guitar for money against the Radiohead guitarist? No, I'm not interested in that. Do what you're really good at for money. Why would you do something you want to kind of partially do for money? That's what people do for investing, and it doesn't make any sense. Hi, Martin. Could you talk about the first time you made a big profit and how happy you were to tell friends and family? I mean, you can take a look at my life. Profit doesn't change how happy or sad I am. I've got, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 programming textbooks within reach of my two arms. I'll be happy when I've mastered those. Things that make me happy in life are friends, relationships, family, the pursuit of knowledge, good food. It's as simple as anyone else. I'm not, sure, professional achievement, absolutely. It's something to be happy about. But if you let that control you, if cash rules everything around me, then I think that, that would be a negative outcome. I have a lot of books, but I don't think it's the number of books, it's the amount of time you spend reading them. Think the dollar could collapse? Sure. Favorite 𝗓𝗓𝗓𝗓𝗓 album has to be Parting the Sea Between Brightness and Me. Efficient market hypothesis, I actually think it's fine. I mean, the idea, it's not supposed to be monolithic. The idea that markets are efficient should be something that permeates your brain at some point. It's important. I mean, 99% of the time we spend investing, we're wasting our time. We're recycling garbage, stuff that's already done by other people. It's not fruitful. It's that 1% after an enormous amount of energy and time and insight that you find that one great investment. Yes, it is valuable. But in general, yeah, of course markets are efficient. That's the point of a market. Would you say you're good at investing? So I'd say that if I focused 100% on investing, that I'm relatively good at it. The problem is, it depends on the format, because I think private equity and entrepreneurship is a form of investing. So let's leave it at that. But yeah, I think it's sort of like Karl Malone once said, every time he wasn't in the gym, it made him nervous because there's somebody else in the gym. I think to be really good at something, you do have to dedicate yourself to it. It doesn't mean you have to be pathological about it, but I do think you have to, you can't, 95 sounds good, but once you start like slipping into the 80% range, you're going to be beaten by someone who's doing it 100%. I don't think a Roth IRA is a tool for an unsophisticated investor. Again, just replace it with a boxing analogy. Do you think I should box and not know, do you think I should bet money on my own boxing match against a professional boxer and I don't know how to box? The question answers itself.